US inflation is running hotter, but not enough to stop the Fed from cutting rates. US consumer price inflation came in at 2.9%, showing some signs tariffs are feeding through into prices, but markets took that as a relief. They are now pricing in a virtually certain rate cut next week and 71 basis points of cuts by Christmas, which would be a cut at every meeting after noticeably weak jobs data. Laura Cooper is head of macro credit at Nuveen. Laura, jobless claims hit their highest in 4 years. Does it look to you like the US labour market is in serious trouble?
I think we are seeing signs that the labor market is in a more precarious place than certainly most market participants had expected earlier this year. Yes, we did see that initial jobless claims print come in at 263,000, but as well, this came during a week where we saw quite sizable BLS revisions, and this follows after a fairly tepid payrolls print the week before. And this is really setting up the policy path for the Fed for, it's potentially consecutive rate cuts. And it's one of the reasons why we've seen the market really price in those expectations over the past week or so.
Do you think Fed policymakers are already behind the curve here?
Well, that's a key question. But I think, if we look at what's happening on the inflation front, we did have that core goods inflation print actually surprise to the upside. We're seeing 3 consecutive months of upswing in terms of that particular print. And we think there's going to be even more room for upside given the tariff risks that are going to start filtering through. So from a Fed perspective, they want to ensure that price stability. So they're going to still be cautious in terms of aggressively cutting when there's this backdrop of still potentially sticky inflation. So it's one of the reasons, yes, we think they're going to cut by 25 basis points in September, but perhaps markets pricing in 3 cuts by the end of the year. The Fed right now is really looking at 2 cuts. And I think the meeting next week will really signal whether they're going to continue on that 2-cut policy path, which is in line with our expectations.
Just to zero in on inflation, you think then that we haven't yet seen most of the impact of those tariffs on US consumer prices?
I think we certainly haven't seen that the impact of the tariffs come through yet. I think what we have seen is that exporters are absorbing some of the prices. Even some of the corporates are absorbing some of those prices and margins and not yet pricing it in to their consumers. But we think that's probably a trend that's going to come through. When we look at producer prices, we are seeing a bit stickier measures there, and we think that's going to have more of a pass through. So from a core inflation perspective, we still think that's going to be above 3% through the end of the year. Not in this runaway type of inflation scenario, really just this one-off shock, but I think enough to make the Fed a bit more cautious in terms of what we're seeing in the labor market and inflation, and trying to look at the tensions between the two.
There has already been a marked easing in US borrowing costs, with the 10-year Treasury down about 20 basis points in 2 weeks. What does that tell us the bond market is thinking about the economy?
Well, I think we're seeing a couple of 2 different stories happening in the bond market and the equity market. So the bond market is pricing in, really more of a downbeat economic outlook, and that's being driven largely by the recent labor market data and really discounting a lot of those inflationary pressures as being transitory, let's say. But in the equity market, the more that we see this bad news come through, well, it's actually been good news for stock markets because they're ramping up their expectations that the Fed will continue to ease those financial conditions. And I think the key question for investors is how much more can that rally extend, particularly if we see a bit more of a hawkish tilt from the Fed next week that prompts a repricing of those Fed rate cut expectations. So perhaps stocks are in for a bit more volatility through the end of the month.
Finally, Laura, President Trump has launched fresh legal action to try and remove Lisa Cook from the Fed board even before next week's rate vote. Will voting policymakers be feeling the political pressure? Should the market worry about that?
I think at the margin, the market is increasingly worried about Fed credibility and just the independence of the central bank. It's one of the reasons why before the recent long end rally, we did really see that long end come under pressure on expectations that the Fed, may be inclined to cut rates despite the inflationary backdrop, in part due to the political pressures. I think at this juncture, though, we are still of the mind that the Fed is going to take that data-dependent approach. They're going to enforce that independence. Perhaps into next year, as we start to see the composition shift in terms of the Fed, perhaps then that will be more pronounced on investors' radar.
That was Laura Cooper of Nuveen. Don't forget you can watch more videos on Reuters.com.